Intro. Welcome to Wealth Building Through Real Estate. I'm Dusty, your guide through the ever-evolving landscape of real estate markets. Today, we're diving into the recent shifts in mortgage rates, inventory trends, and long-term investment opportunities. Let's unpack what these changes mean for buyers, sellers, and investors alike. Market overview. This week, U.S. mortgage rates dipped slightly, offering a breath of fresh air for prospective homeowners. The average rate on a 30-year fixed mortgage has fallen below 6% for the first time in years, landing at 5.98%. While these rates provide a modest boost to affordability, the secondary mortgage market still faces some turbulence. Bond investors are weighing a rebound in oil prices against mixed housing data, which adds a layer of complexity to the market dynamics. Despite this, refinancing hasn't surged just yet. However, the potential for further rate declines later this year keeps both purchase and refinance applications on the rise compared to late 2025. With inflation moderating and the Fed likely holding steady in its upcoming meeting, there's cautious optimism in the air. Key financial stories. As we step into spring, we're seeing a notable uptick in housing inventory. The traditional winter slowdown is giving way to new listing activity. Sellers are adjusting their price expectations, with the share of listings featuring price cuts still elevated compared to last year. This adjustment is bringing the market closer to an equilibrium, striking a balance between buyers and sellers. In Austin, for instance, pending home sales are up by 7.4% year over year, with average sold prices slightly higher than last March. Nationally, buyer interest is rebounding too, as inquiries and tour requests tick upward. Competitive pricing continues to attract multiple offers, but less favorable locations are seeing longer days on the market. It's a classic sign of a market in recalibration. Investment tips. Home price growth is slowing down, which many experts see as a healthy moderation. This creates a more balanced entry point for first-time and move-up buyers. Despite higher mortgage rates, wage growth is outpacing home price increases, keeping homeownership within reach for many. Looking to the future, real estate remains a cornerstone of intergenerational wealth. Gen Xers and millennials are poised to inherit over $2 trillion in U.S. residential property wealth over the next decade. This underlines real estate's status as a stable store of value. Additionally, there's a notable shift in investment strategies with private capital leaning towards residential and single-family rentals. These trends highlight the sector's appeal for traditional home buyers and institutional investors alike. It's clear that real estate continues to provide dynamic opportunities for wealth building. Whether you're buying your first home, adjusting to market trends, or seeking long-term investment, staying informed is key. Thanks for joining me today. Remember, when the dust settles, only the truth remains. Until next time, keep building your wealth.